Hello, this is Joe Slezak, Director of Marketing and Business Development for H2R CPA. Thank you for joining us today. The Q&A session will occur at the end of the presentation. We have tried to answer as many of the pre-submitted questions as possible during the presentation portion of this webinar. Please use the chat feature to submit your questions, which can only be seen by me. Please note, since this presentation is being recorded, specific questions which contain identifying information will be filtered to protect our audience. I will now turn over the presentation to Kieran O'D. Thank you.
Thanks, Joe. Good afternoon, everybody. The partners and staff at H2R CPA would like to take this time just to make sure that we're reaching out to people, giving you vital information as the economy continues to struggle and people have questions as to what stimulus package loans were available and how we can be of assistance. First, I'd like to say thank you to Joe for putting this together. Thank you to many of our partners and staff members that have spent time researching this topic over the last 2 weeks and helping clients through these times. I think over the past 2 weeks, as we've talked about putting this presentation together, we could have changed the name daily just because of how this process has gone, the amount of uncertainty, the new information that we're learning every day. So we've tried to accumulate what we've learned, go through a bit of a overview of where we are, what the industry and the loan process is looking like, and then we have some great SBA experts here to present today to answer some questions and talk more specifically about the programs that are available. So I'm Kieran O'D. I'm an audit partner with H2R CPA. Going through the rest of the people on the presentation today, Lucas Rihely, one of our tax partners with the firm, is on. Many of you who sat through the webinars earlier this week on the FMLA topics heard Lucas talk about the tax aspects, specifically related to payroll taxes with those programs. Lucas is on today for the Q&A portion in case we have any questions that relate to tax effects of anything that we talk about today. Jackie Woodstock is an SBA specialist with Citizens Bank. She will be presenting today, as well as Heather Thomas, who is the SBA business development person with Huntington Bank, and one of Heather's colleagues, Lindsay, who is a SBA product specialist. So, three very well-informed SBA lenders who understand the SBA process and will help us understand more about the programs and things that are changing. So I'd like to spend a moment talking about how we got here. And I think it's going to help put this into perspective for everybody about how significant this program was and the amount of work that's gone on over what really amounts to less than a 2-week period to get this rolled out. So I don't want to spend a lot of time rehashing some of what we learned last week, but more just where we are and how we ended up here to give some perspective into what we see as kind of the future of this, right? As these loans now seem to mostly be applied for, lots of questions on funding. And then after we get through that, there's going to be lots of questions on what can I do with the money and how does the forgiveness work. So I just want to kind of walk through this logically. So tomorrow, 2 weeks ago tomorrow, President Trump will have signed the CARES Act. And as part of that was the payroll protection loans, which were very heavily publicized. So at the time that this act was passed, there was a rush to get this out because it had been talked about for quite some time before that. So the SBA, the Treasury decided they were going to have these programs administered by the SBA, and within basically over the weekend, plus 1 day, were able to issue some guidance on March 31st. So the Treasury applications were posted. They were subsequently changed 3 times because they were rushed a little bit at the beginning, which is, I think, what we learned throughout this whole process. So these were posted last Monday, available by the Treasury. Throughout the week, banks were reaching out to their customers and letting them know that maybe they weren't going to be ready to go live on April 3rd. So, the Treasury released these forms and said, hey, the programs are open and will be available to begin loaning money on April 3rd. I think that was a surprise to most in the industry, how quickly that came through. So we had a lot of the banks reaching out and saying, hey, we're not sure when we're going to be ready to go live, but some came out and said, hey, April 3rd is not realistic. So as questions continued to mount, the SBA issued a 35-page interim final rule on late in the evening on April 2nd, which was last Thursday, which was the day before the applications were really ready to be available. This provided some clarification, but quite honestly, not much, and it raised more questions. The rules and regulations that were on the actual application were changing. They weren't consistent with the wording in the law. So we saw last week a lot of law firms, banks, accounting firms struggling to interpret what was going to go into these calculations, how the law was going to be enacted and doled out. So last week there was a lot of different information going around. I think, as we were helping clients work through these calculations and trying to determine what was and wasn't included, we were starting to see reports from companies like ADP that came out and said, hey, here's what you should be including as your costs. They've since had to retract those and say that their understanding at that time wasn't the understanding that came out. So last week there was just a lot of information going around, a lot of people trying to catch up on where this was, how could they apply, what was going to be included. So on April 3rd, some banks did open their application process, but most banks weren't ready. And we saw over last weekend, there was just a mad scramble among the banks to get their platforms up. Most were trying to do this electronically. So there were website crashes, a lot of delays with information. What we saw as we were helping clients do these, and we would get to see a lot of different banks, that no two banks had the same process, nor were they requiring the same information, or did they have the same calculation as to how this was gone. Again, this was all pushed out so rapidly, and there wasn't very much authoritative guidance given to this process. So I think everybody was really scrambling to understand how to administer this, right? It's $350 billion worth of loans put out in less than a 2-week period, with very little guidance from the Treasury other than get it out. I find it funny that the federal government pushed this onto the banking system, and it makes sense if you think about how they wanted it administered, but they've been talking as the government about sending out $1,200 checks to people for weeks, and they can't get that together. But they wanted the banking system to be able to process this many loans in such a short period of time. And quite honestly, I don't think a lot of the banks were equipped to do this. And we saw that last week. As that continued to unfold, the SBA obviously was probably getting pounded with questions from various governing bodies. I know the AICPA was communicating a lot with us, with the CPA firms, to try to tell us what their interpretation was from the groups that they were reaching out to. And I'm sure the lobbyists for the banks and other financial institutions were doing the same. So then the SBA felt the pressure to release these, and this happened on the 6th. So 3 days after they were already accepting applications, they issued a 6-page payroll protection loans frequently asked questions. So this did help to answer some of the questions. It made the calculations clearer, but it was a bit late in the game. At that point, many people had already applied. So this process has changed dramatically. And from the time people started applying, the information that has been asked for has changed. The calculation has been changed. Kind of where we are now as of April 7th and 8th with the new simplified guidance from the FAQs, we have a better understanding of what is and what isn't to be included in these calculations. Some of the major confusion points were around compensation and this $100,000 cap per employees and whether benefits and other things counted towards that. I read at least 6 or 7 different ways last week that people were speculating on how this was going to be calculated. But the compensation is wages and cash payments, and that's what's capped at $100,000. Benefits and the other things that are in addition to that. Self-employed earners are allowed to include up to $100,000 for themselves in the calculation. And then once you put all this together, divided by 12, you now understand what your average monthly payroll cost was. So for something that seemed like a fairly benign definition, the financial community scrambled for a week to even understand what went into this and what was included in this. So that guidance and the frequently asked questions has now also tried to clarify this in terms of, hey, we issued this 3 days after the applications were already being accepted. What does it mean for me with my application that I've already sent in? So the guidance said for applications that are in process, you're not required to change it if you followed the guidelines that were available at the time. But if you need to change your calculation, you can go to change it for the ones that are in process. I don't honestly know what that means with the bank. You're going to have to reach out to your banker. I think what we learned in this process was really spending time and understanding and having a good relationship with your bank. And sometimes, clients got frustrated that they weren't getting responses from the banks. I think the banks didn't know how to answer some of these things. I talked to a lot of banks over the course of the past 2 weeks, and they were just as frustrated with the processes internally that they were getting, the guidance that they were getting from above, and the people above were frustrated with what they were getting from the SBA. So now that we understand the applications are in, you can change your application. What I would caution anybody is everyone right now is concerned how slow this process is, and is my application going through? I would be wary to make any changes that would significantly impact that process and where you may or may not be in the line, so to speak. So again, you have the ability to change that calculation if you're still in process, but be careful. The guidance also said, if it was a more favorable way that you calculated at the time and you followed the guidance that was available at the time, that seems to be, they're going to accept those as well. I think what we all have to understand is the spirit of the law that was intended was to keep people working, to get this money to businesses so that they didn't have to lay off employees, so that when the economy is ready to turn back on, we can quickly flip the switch. You can bring your workforce back, have your workforce not have to scramble to bring them back. So a lot of what ended up coming out seemed to mirror more the spirit of the law. It was just very rushed and very poorly written. And the bankers, accountants, and lawyers beat up on the wording that was in there because they didn't understand it until more guidance was issued. So follow the spirit of the law. How you're following this and what you're thinking seems to be the best course of action. So many companies have applied, but honestly, we're seeing limited number of our clients actually receiving some kind of acceptance or verification. Right now, it seems to be more information is in. We're starting to see requests for documents to support those calculations. And there's still a lot of confusion as to the underwriting process with the bank and what they're going through and how much of this they're going to verify. So continue to talk and work with your bank at that point and understand where they are. So where are we now? As they still scramble to get these things processed, what we're telling people is try to be a Boy Scout, have as much prepared and be ready. So get all your documentation together because each bank is asking for different things. So and the common lists that we've seen have been wage statements, anything to support wages for the year. Monthly, if available, more so for businesses that want to think about it seasonally. One of the other clarifications that came out the other night in the frequently asked questions were, what payroll period are we covering? We had seen a lot of things that said rolling 12 months, a lot of things that said just use 2019. I think what we got the other night was it's okay to use 2019. That's going to be easier for most people. For some businesses where you had changes in staffing, it might make sense for you to do the calculation based on a rolling 12 months. So our advice to people has been gather the information that you can to do this, whether that's annual, whether it's quarterly or monthly, payroll support, the tax returns, the statements that you're getting from ADP, the corrected ones now, hopefully they'll be getting out. And then have the ability to figure out how much of the people's compensation over $100,000 you want to have to deduct. And then all your support for the benefits that you paid, whether those are health insurance benefits, retirement benefits. And then the final part that's allowed in the calculation is any tax that's assessed to the employer on employee wages at the state and local level. So not your federal FICA taxes that the company pays, but any state. And for the most part, that's unemployment tax. And it could be different depending on which state you operate in. In PA, there's the PA unemployment tax. And some small municipalities charge an employment tax or something like that, probably minor, but those things are allowed to be included as well. For self-employment earnings, you need things like a 1099 statements or Schedule C income to verify your self-employment earnings or K-1s from a pass-through entity. So gather all that documentation now, and some of it they're going to be reviewing now. Some of it you're going to need for forgiveness later. And we go through this one pretty quickly. It's still not 100% clear what you need. Everybody's underwriting process is different. So gather those documents, have them ready, be prepared. And really, where do we go next, I think, is what questions on a lot of people's mind. Last week, it was a mad scramble to get the applications. And to this point, most people seem to have their applications in. I would urge you that everybody's concerned that the money is going to run out if you don't have an application in and you're thinking about it. You need to get it in as soon as possible. But at this point, again, most applications are in. A lot of what we're seeing is people are still waiting for the underwriting process and what the approval process is. So stay in touch with your bank, be prepared, have your documents together, be ready to respond quickly. Time is of the essence. And I think the next big thing that we see on the horizon is going to be forgiveness. They haven't spent much time at all clarifying the original guidance on forgiveness because they were rightfully so, trying to get the loans out and administered. I hope SBA will put out more guidance on forgiveness. So, what it does say now is that a big portion of these loans can be forgivable to the extent that you're using them for the designated fund payments, which was wages and benefits, mortgage interest, rent, utilities, basically some of the things to keep your business and your employees alive during this time. So when you get the funds, there is still going to be guidance coming out as to how we're going to calculate forgiveness, what that process is going to be like. The guidance that we've read, it's really going to be up to the banks to determine how that you're going to apply to forgiveness through the bank. So similar process to what we have now, but there really hasn't been much time spent on this. So things to consider, right? Hey, I'm one of the lucky ones. I got through, I got my money. We don't have a lot of guidance on forgiveness yet. What should I do? To the extent possible, we would suggest setting up a separate account to put those funds in. It just makes it much easier to track and account for those better. To the extent that that's not feasible, keep detailed records. Make sure you're keeping records of all the payments that you're using these funds for. Don't use the funds for anything that isn't an allowable expense. We will continue as a firm to put out information that we find useful, helpful, and relevant to our clients that's actually supportable by guidance. That was part of the problem last week, is there was, again, if you looked at one or two different law firms and what they were saying, a lot of times they juxtaposed each other because there wasn't guidance. So as these things become more clear, we'll get information out to you. To the extent you have questions, reach out to your advisor at H2R CPA. We have internally a team together, so we're trying to accumulate the frequently asked questions for our clients and figure out how best to advise them in this time. But again, be as detailed as possible. Keep adequate records. Separate the funds if at all possible. And then really the last question that we're getting is, what if funds run out? What's next? I wish I had a crystal ball and could answer that. I think by watching the news and what we see on TV, the Senate appears to want to fund this, but whether bipartisan efforts will come together, there are headlines today about each side kind of fighting for what they want. So I would imagine with the optics of this, they're going to put more money in the program. I don't know how long that's going to take, and I don't know how much it'll be. But that's kind of where we are now. That was a State of the Union, and now I think it's best that we kind of turn it over to our experts and ask them to help us understand these programs in a little more depth and the other programs that are available through the SBA. So I'd like to turn it over to Jackie Woodstock from Citizens Bank to talk about the Paycheck Protection Program.
Great, thank you, Kieran. So we're going to be going through the U.S. Chamber of Commerce documentation that came out a little while ago, and it's the Paycheck Protection Program that we're going to be going through. Then we can go through the eligibility. Okay, most people have been calling me about eligibility. Who's eligible? How do I know if I'm eligible? Well, let's go through this eligibility right here. It says you are eligible if you are a small business with fewer than 500 employees. There are other size standards that the SBA does require the lenders to adhere to, and that's just something that we would have to go through during our due diligence period. They are allowing nonprofits to apply for the loan as long as there are 500 or fewer employees. That's kind of not normal for SBA lending. We usually don't work with nonprofits, so that's a great thing that the government has allowed us to do, is work with nonprofits. If you're an individual and you operate as a sole proprietor, you're allowed to apply for the loan starting on the 10th. So gather your information, sole proprietors, you'll be able to apply tomorrow. If you're an independent contractor, they also can apply on April 10th. If you're self-employed who regularly carries on any trade or business, that is also a person who needs to apply tomorrow. So just keep that in mind. I would get on your normal lender's website, get on there, apply as soon as possible. Veterans organizations and tribal businesses that meet the SBA size standards. There are some special rules that apply to this program, and they apply to NAICS codes that start with 72, which are typically food service businesses and hotels. If you have several different hotels, each hotel that has a tax ID number can apply for the loan, or each restaurant, let's say you own a Burger King and you have 12 different franchises, each one of those franchises is allowed to apply on their own tax ID number. Remember that the 500 threshold applies to all employees, full, part-time, and any other status. Perhaps you have some contract employees that would apply as well. What will lenders be looking for? So this, as was stated before, actually kind of varies between lender to lender. So what we're looking for is just the information that was the guidance that was handed out on the previous slides that Kieran went through. If you're a sole proprietor, we want Schedule Cs. We're seeing a lot of ADP paperwork come through. We're taking those. So we need the application that came out and then actually was updated. So we're actually going to accept either application, and we're going through and just verifying how you came up with your monthly payroll number. Once we look at the documentation that you verified, then we are moving it on to out of our underwriting queue into our closing queue. So this is how you do your calculation. You take, your salaries, your wages, your commissions over either the past 12 months or 2019. There was guidance out that, kind of conflicted one another. We didn't know if it was 2019 or the rolling 12 months. Well, we're accepting either or, depending on how you want to do the calculation. So on the screen, you'll see the sum of included payroll costs, which there's a drop down there that shows, salary, wages, state, local taxes, the independent sole proprietors, Schedule C. For anybody that makes over $100,000, you're going to have to limit their salary to $100,000. There was some confusion around what was considered salary. So we've got some guidance out there now that the $100,000 is just strictly payroll. If there was health insurance or any other type of incentive package, you can actually add that on now. Before, 2 days ago, we didn't have that guidance. So at least now we know it's $100,000, then you can add a little bit for health insurance on there as well. So once you arrive at your payroll cost, you times that by 2.5, and your CPAs can usually help you with this. That's the whole point of this call. So we see on here what will be forgiven. What you need to do is, from the time that you get your SBA loan, the 8-week clock starts ticking. You have 8 weeks to spend this money on paying your employees, paying your interest on your utilities, on your rent, paying your mortgage. 75% of what you pay out has to be paid to employees, and 25% can go to other things, which like rent, leasing agreements, utilities, and those sort of things. At the end of the weeks, that's the amount that can be forgiven, and that's how the lenders, we believe the lenders need to prove that. So we'll probably be reaching out to everybody that has a loan with whatever bank you're at and trying to verify those numbers. The thing that we don't know is exactly how we're going to do that, because that guidance has been given from the SBA. So that's kind of a gray area right now. So just keep all of your documentation, keep every piece of paper in a separate folder, so when your bankers ask for it, you can hand it over. And at the end of the 8 weeks, then the SBA theoretically is going to be paying off your loan. And if you've spent something that wasn't approved, for example, paying your employees, paying rent, utilities, then that portion that is not forgiven, that portion gets termed out for 24 months. So the first 6 months of this loan period, actually, you do not need to make a payment. So 6 months, you don't make a payment. Then what's not forgiven gets termed out over the remaining months. I believe that's the end of my presentation. So I'm going to hand it over to Lindsay so she can talk about some of the other programs.
Thank you very much, Jackie. Yeah, in addition to the PPP program, which is very exciting and such a deviation from what we're used to working with as SBA lenders, Jackie pointed to some of the highlights. First of all, it's not a loan, right? It's forgiven. It's not permanently a loan, and also that it works for nonprofits. And so many of the questions we as lenders were working through were really not so focused on the calculation, although that was very important for us to make sure we understood. It was really who can use the program and who can't. So that's been where a lot of energy was spent through much of last week in trying to get clarification from the federal government, because it's similar to the SBA program in those sorts of definitions, but it's sufficiently different that we needed to make sure we understood the devil in those details to make sure that capital was being provided to every firm to the spirit of the law. And I think that to Kieran's point, we're very pleased that the responses and the clarifications that we finally are, as we receive them, they do seem to continue to echo the spirit of the bill and the flexibility of the funding and the flexibility of the definitions of who's available, who is eligible. But the definitions still are meaningful. So be mindful that a lot of this is different from other lending on the PPP side and on the EIDL side as well. There is a lot of self-representation that the firm has. In a normal SBA loan program, colleagues like Jackie or Heather and I would have a lot of responsibility for making sure the borrower is eligible for the program and the use of the program. In fact, there's whole job families at SBA lenders who focus on nothing but this task. We, though, in this program are really relying on the attestations of the client and making sure that they feel that they are eligible. There isn't the time to fund this rapidly and do that level of diligence. The SBA has said it's not incumbent on us, but that does mean that over the next few weeks, as forgiveness guidance continues to be published, that you stay in lockstep with your financial advisors, with your accountants at H2R, with the bank that you're working with as a best practice, because as we know, we don't have these guidelines yet, and you'll want to make sure you understand them as you get through the amount that you spend and as we continue to have these clarifications. So it is all about continuing communication and conversation. We are having it with the SBA. All the key lenders are on a daily basis over the weekends, and make sure you are part of that ongoing conversation. Try to be patient because it's evolving, but make sure that you continue to check back in and confirm. We have seen calculations change and eligibility definitions change a good deal since just last Friday. And I think we'll see a lot of evolution in the forgiveness discussions over the next few weeks as we get the final details on them. So do be mindful of how that can apply to you and to your scenario. The PPP is the primary focus of our discussion today. And Jackie, thank you so much for that great outline of it. But we did want to also make you aware of some of the other exciting uses and programs that are available coming out of the CARES Act and also out of additional stimulus programs. The other is the EIDL loan. Now, there was discussion about how the EIDL loan can work with the PPP loan program, and this was an area that we were, as lenders and advisors, were waiting on clarification from the SBA, and I think we're all relieved to see that the programs can work pretty well together. So you can pursue both. The EIDL loan is the Economic Injury Disaster Loan Program that you apply for directly through the government. That's through the SBA.gov portal. That application process has evolved a great deal over the last 2 weeks and has been improved. I think if you were one of the first ones in on the program, you had a pretty frustrating experience, and everyone appreciates that was the case, and it has been improved. It is still handling a tremendous amount of volume given the design of the program. So there is a lag on getting these funds fully funded and into the hands of the small business community. But the EIDL loan program is available in conjunction with the PPP loan program, as long as we're not using them for the same purpose. Because while there is a payroll, eligible payroll use for the EIDL loan, there is also for the PPP. You can use the EIDL loans for a broader array of uses. So if you're using it for those other needs of the firm, you can also have a PPP loan for your payroll commitments and obligations. The EIDL loan is intended to remain an actual credit facility. It's not intended to be wholesale forgiven, although there is an initial grant and advanced, they're calling it the advanced feature. That was not initially rolled out with it in the first iteration of the expansion of the state-by-state declarations of disaster and the ability to apply under it, but for subsequent applications, the advanced feature has been applied. So there's up to $10,000 that can be forgiven, It was intended to really expedite the funds into the hands of small business owners. I'm sure overall it will, but it hasn't been as fast as I know many people had hoped, but they are still working through it. But this is, aside from that advance amount, the EIDL loan is intended to remain a balance sheet loan and a loan that will stay on your books that you will pay down. It is also not something you apply for a set amount and you don't worry about the calculation. The SBA itself is going to do the calculation. The EIDL loan programs are different in that regard. Some of the key aspects of the EIDL loan program are that it can be used, as we said, for payroll expenses, but also for fixed debt. So you can use this to service your debt on your other that you have already outstanding. So you can look to utilize the program under the EIDL to service your equipment debt and your other debt, not just your mortgage interest like you can on the PPP, but actually for a longer term need to fund your obligations. And this is a nice way for these two programs to marry together to meet the capital needs of clients. You can borrow up to $2 million. Although it is a loan that's not forgiven, it is at very attractive rates. You see 3.75% for most for-profit firms, 2.75 for nonprofits, and it's structured up to 30 years. There's no forgiveness aside from that initial grant feature that they call the advance. And it does require the traditional personal guarantees and available taking collateral filing, so where the PPP loan doesn't have that requirement. And you would, as I said, go to SBA.gov, /disaster. If you go straight to SBA.gov, you'll see the yellow banner there. So these programs can work with each other. They can also work in conjunction with standard SBA lending. Another key aspect that has come out to benefit the small business community in terms of their capital access here as part of the CARES Act was a payment relief function. So this is a very exciting function as well. So for existing SBA borrowers, whether they have a 7A loan or an SBA Express loan, or if they're in a SBA 504 loan, the fixed asset program, they receive 6 months of payment relief on their existing credit facility. So your lender should be sending you notifications to that effect. And that's actually a principal and interest relief, and the payments are actually made on your behalf. So you don't have a deferment. It's an actual payment relief. It's about 95% of most small business SBA borrowers will qualify for that. So if you're already in an SBA facility, there has been some enhancement to your ongoing obligation to provide you some flexibility and some additional cash flow as well. But with that, I want to touch base on I'm going to turn it over to my colleague, Heather Thomas, and she is going to touch base on the different opportunities for the traditional SBA loan programs as well.
Thanks, Lindsay. I really appreciate that great information supplied regarding the EIDL program. A lot of us are looking to see the best combination of capital resources that can be used to assist our clients. And like Kieran and Jackie mentioned at the beginning of the presentations, what we're also happy to see is that as these programs not only roll out, but also get interpreted and digested, we do feel like there are so many aspects where they're sticking to the spirit of the program. So for example, that grant feature that Lindsay mentioned in the EIDL program that came to fruition a bit later in the process, if you have already applied, don't worry. They've set up the program so you're not going to miss out on that. If you have a case manager already assigned, contact them. If you've already put an application in, and this would have been for folks applying before the 27th, I believe March 27th is when the feature was turned on for that grant component, you can still go in and amend things so that you can be eligible for that. But we also want to overall keep a very comprehensive focus for all of our business owners. So there are certainly some new and very exciting programs coming out. There are also some really great enhancements to existing programs that we've always had at our disposal, but there are also more of those continuing programs that we are out there, certainly myself and Jackie and Lindsay utilizing every day to help our clients. And those are still great programs to be a resource to you during this time. So I want to take the conversation back to a little more of a high-level perspective. And I just want to acknowledge the fact that all of us, and including your advisors here at H2R, understand that you still are going to have some needs that remain on the table even after you may have pursued things like the Paycheck Protection Program and the disaster program through the SBA. So let's say you are still in need. We want to give you a sense of where you can still go from here to help get those needs fulfilled. So I'm going to start on one of our slides that just go through an overview of some best practices. And on that slide, I just want to share a little bit of information about ourselves. So here at Huntington, we're dedicated to making our community strong through our support of local business owners in those communities, and even through the most difficult of times. Lindsay and I have both had the pleasure of working at Huntington for over 10 years, which isn't too common in the banking industry. Huntington helped our clients through the last recession, and we are excited to help our clients through the health crisis that we've seen and the economic strains that have come out of that health crisis. So we are very pleased to at least be in a nicely capitalized position where we can use our resources to help other folks as well, like so many other banks out there, and help our clients through this time. So it's our sincerest desire to use those resources and provide additional funding needs when possible to the businesses that are so vital to the communities that we're all living in. The information I'm sharing today is certainly not comprehensive, but my hope is that it gives you some more directions to look, and as you work with your trusted advisors, you can put together a very large-scale approach to get yourself through this time. So our approach here is simple. We want to understand your business goals and provide financial solutions that will help support your success. We really do understand that your business goals today are much different than they may have been 4 or 5 weeks ago. And I think that that's why it's so important that today, no matter where you bank, you're reaching out to your banker and asking to have a conversation to reassess what your current goals are, even things like your current transaction volumes and what those may look like compared to where they were a month or two ago, to try to make sure you have the best solution possible. Our response is always available at the link you'll see on this best practices chart. It's huntington.com/coronavirus, and that will pull you into all of our resources for not only our business clients, but also our personal clients as well. Turning now to the next page in the slide, I want to review some other support options. The most exciting one, I think by far, or certainly one of the most exciting ones, Lindsay reviewed really nicely for us. Benefit to existing SBA clients through the Paycheck Protection Program. And just like she said, 6 months of payments made by the SBA. So I know Jackie and Lindsay and I all really, really believe in the benefits of the SBA program, and generally speaking, in all times, the benefits it can bring to our borrowers. But we're so excited to see a special enhancement added for existing clients. And they're really trying to do the right thing too for clients that are entering into new SBA facilities. Many of those clients too will be eligible for that 6 months of payments made on their behalf by the SBA. So in light of that, remember that message. Reach out to your bank and let them know if you are struggling or if you anticipate struggling. What we don't want to see happen is maybe some reliance on a thought process where you think you can make it, and then you get a month or two down the road and you realize you're struggling more than you thought. Don't ride out the storm. This is a chance and an opportunity to really be proactive. We've certainly seen a lot of evolution through the past couple of weeks to not only how we do business, but how we do and live our daily lives. But what's so important to remember is a lot of the business owners are sitting on financial statements through February that are basically unaffected by the situation that we now find ourselves in. And much of March's financial statements would have very little disruption as well. So as we work from a lending capacity, we know it's always going to be much easier to lend in a situation where we have ample cash flow as opposed to a time when we have more strained cash flow. If there is any doubt in your mind, take advantage of the current financial statements that you now have at your fingertips and have a discussion with your lender as to whether or not additional support is needed beyond what may be provided in the form of a PPP loan or through the EIDL funds available to you. And don't just stop there with the approach from a lending capacity. Also think about deposit needs and treasury needs. I mentioned earlier that your transaction volume may be changing a great deal. Your lender or your depository bank can oftentimes make changes really easily to update your accounts to reflect the current transaction volume. And in most cases, they can just turn that switch back to the other direction once your volume picks up again. But it may really be quite meaningful in what it can save you from a fee perspective or a volume perspective on these accounts. Other options are also available. And I think this is pretty common through the industry. I know we're doing all these things here at Huntington, and I'm sure other great institutions like Citizens Bank are doing these things as well. So talk to your local bank and see what they're offering. Payment relief options on loans may be offered. Deferrals may be available to you to help you get through this cash flow crunch. Also, suspension of late fees are really common in our industry right now. And that goes down to the credit cards that you're using too. Many folks are looking to see how they can help you as a small business owner. And again, just don't forget to look at your changing and evolving working capital needs as you go through this. It's going to be difficult to project to a certain extent, but at least in what you can project, it gives you an opportunity to be reactive to those needs when you are in a position to have good financial statements at your disposal. As I segue into the next slide here, I want to talk about a product that will help you be able to do that. It's SBA Lending Basics for the good old 7A program that Jackie and Lindsay and I use so often in our roles. I'm going to be pretty quick on this one. I want to get to a good portion for Q&A here. But keep in mind that some general benefits of the SBA program, you can improve cash flow with extended terms. So in a lot of cases, if we look at something just like general working capital, where banks would be providing money like that on a 1 year, a 3 year, or maybe even a 5 year term amortization, the SBA program allows you to take something like that out to 10 years without a prepayment penalty. And we know how much moving that term and amortization out can have an impact on your cash flow. That can be a very substantial savings to your monthly cash flow. What's really exciting is that under the SBA program, that methodology also applies to refinance. And I'm going to just jump ahead to the next slide here. Certainly take a look at your time on those lending basics for the program and contact Jackie, Lindsay, or myself if you have any questions on some of the other great benefits like no financial covenants or project financing. But right now, as we run a little short on time, I'm going to hit the debt restructure highlights because a lot of folks don't realize that the SBA program is actually quite friendly to debt restructure. And there's a huge opportunity if you would look to do something like a vehicle refinance, for example. A lot of my clients have benefited by taking their comprehensive vehicle debt that's typically on 5 or 6 year terms. We've had a nice robust economic period. A lot of you have really great rates on facilities, and a lot of those great rates come with shorter terms and amortizations. I've helped many clients by taking debt like that, existing debt on their books, and putting it out over another 10 years. Now, work with your accountant as we take advantage of some of these benefits and we extend out terms and amortizations. We know we don't want to lose sight of something like the useful life of that asset and how it depreciates and how you may need to turn that asset in the future. You can work with your financial advisors, you can work with your accountant to target what you really should be trying to accelerate in terms of principal reduction to keep your debt repayment in line with the life of those assets. But in the meantime, we can use vehicles like that to get your monthly debt service as low as possible and really help you ride out storms that may be ahead for you. And in a lot of cases, the SBA loans that we are doing every day are available with no prepayment penalty. And that means that you can take advantage of low monthly payments when you need them. And then when you're a little cash richer, put that toward the obligations to pay them down appropriately. But when we get into programs like this that don't have financial covenants in place, it can be quite meaningful to helping you ride out a difficult period. So talk to your lender about that. See if a balance sheet restructure could be helpful right now. Even in cases where there are prepayment penalties on SBA 7A loans, that's only for terms and amortizations 15 years and greater. That's only a 3-year prepayment penalty, and it still allows up to 25% of principal reduction per year without triggering the prepay. So this can be a really, really exciting option. But again, don't wait. Look at doing it today where you still have good financials to work off of. I'm going to wrap up this section here so that we can get to a nice, robust Q&A portion before we have to end the presentation.
Thank you, Heather. So I did receive some questions via the chat feature already. So I'm just going to start reading those down. And initially, I'll probably identify a speaker. And if I incorrectly identify the correct speaker, feel free to pass it on to someone else. So Jackie, I'm going to start with you just as you talked about the PPP. So the question is, can any FDIC lender participate in the PPP program, or only those approved to be SBA lenders?
Well, anyone that's approved to be an SBA lender can participate, but the SBA is also looking at other lenders. If there's a lender who's not a preferred lender or an express lender, they can fill out the application. It's called a 750 and get that into the SBA and get up and running. So if your bank is not an SBA approved lender, I guess maybe one option would be to ask if they were planning on becoming an approved lender. But I wouldn't wait for that to happen because the money's probably gonna run out pretty soon. I would try to find a lender that actually is working with the SBA. And so most banks, big banks, are SBA approved. Some of the smaller banks are too. And there is on the SBA website, you can go to their site and it will tell you which SBA lenders are approved, or ask your district office as well.
Jackie, I'm just going to keep it with you for one more question here. If a business included 1099 contractors in their original submission, should they revise their application?
So I'm going to go with the fact that maybe the business has some 1099 contractors. If they have some, what would happen is if they went back and revised it, it might do one of two things: slow them down in getting their money. But if they, if they make it through and they get an approval, if they take that money and they don't use it all, that would be like the part that wasn't forgiven. But if you're pretty sure in advance, you know that you did the calculation wrong, I would reach back out to your lender and give them a new calculation. We are getting quite a few people that are coming back and asking for recalculation based on some stuff that ADP did and some of the 1099 forms, because we have further guidance on those things as well. So my advice would be, it depends on where you are in the project and if you're willing to have a loan after the fact. If you're not, then definitely reach back out.
Lindsay, I'm going to send this one over to you. Give me a second. It's a little bit long, so I want to make sure I get through correctly. If a company pays bonuses, assuming they go to people who make less than $100K a year during the 8-week period after the loan, such as hazard pay, does that qualify as payroll costs eligible for forgiveness?
We don't have all of the details on the forgiveness fine print yet. We're going to be waiting on some clarification there. It is my understanding that yes, as long as you can document that it went through for a payroll use, there doesn't have to be a consistency of wages that is held as the test. There is a test for forgiveness if the wage rates go down by a certain amount, but an increase or a bonus, like for hazard pay, or to keep people in a position where they're, you have to keep them retained, especially given some of the unemployment options that are out there in a potentially fraught situation. A wage increase or a rate increase should not negatively impact the forgiveness with the guidance that we currently have.
Heather, I'm going to put this one out to you, is only because you talked about different loans. I don't believe, and you can correct me, that this applies to municipalities, but what's available for municipalities?
That's a good question. I'm probably going to rely on my team a little bit here as well to see what general knowledge is. I know we've all been on calls with the SBA because I know through the PPP Paycheck Protection Loan, I know we know nonprofits are included. We know veterans organizations are included. So those 501c3s and 501c19s, and also some tribal associations are included too. I don't know if EIDL is going to be available for municipalities. Lindsay or Jackie, through your recent calls with the SBA, do you have an answer there?
I do not have an answer.
Kieran, what I'll do is I'll
say
just go back to, I'll go back to some resources I have and see if there are some resources that we can get together, and then you can put it out as a follow-up. That's a really good question. I just don't have an answer for you at this time, but I'll pull my resources and see if we can get you some options that they might be able to look into. Good one.
And Heather, I'm just going to keep it with you. Is there any hope of including 501c7 organizations?
I would say at this time, there's pretty clear guidance that we can really only include those that I've just mentioned. So we would need to see some evolution in what we're currently working with in order to see the inclusion of that.
So, Jackie, what date will be used as a loan origination date for purposes of starting the 8-week time period used to calculate the loan forgiveness?
The date the loan is dispersed. So not the date that you sign the documents, but the date the money goes into your account. That's the date that the guidance has given us. So it starts that date and it goes for 8 weeks.
I mean, I'm going to start off with Kieran, actually. Kieran, you may or may not have the answer to this. From an accounting perspective, if the loan is forgiven, will it convert from a long-term liability to revenue?
Good question, Joe. We haven't seen any guidance from the accounting bodies as to how the treatment will be. We have seen from the tax authorities, the IRS has issued that from a federal perspective, the forgiveness amount will not be taxable. PA has not said anything yet, so we don't know whether it'll be taxable for the state. For financial statement purposes, again, we haven't seen much guidance. We were discussing this question internally yesterday, and I think what our team kind of concluded until we see something differently is an item like this is probably going to be included in your financial statements as other income or something like that. So you'll see it as income to the business. Obviously, there'll be a footnote explaining what was forgiven and what was turned into a note. But the presentation on the face of the statement, unless they come out with some guidance saying that this needs to be treated as some type of equity transaction, there's really no other way to get it into your financial statement than to have it run through your income statement. So until we see something further, I think that's probably how it's going to go, but stay tuned.
Lindsay, I'm going to send this question to you. I've already applied for PPP. The business is an LLC, taxes an X Corp, one business partner. They pay themselves a mixture of salary and payroll and direct draws. Should he have included the direct draws in their salary?
This is probably an applicant that would have been intended to apply under the opening on the 10th, if it's a single payroll being run. And I know we are still hoping for some additional clarification because it does allow us to use, there is language in the interim rule that does allow for different ways to approach this from a net income perspective. Draws them, the payroll, anything they pay themselves on a payroll would just be easily documented through in the payroll. But there is also a way that we'll be able to calculate for net income. But this has been an area that we're still looking for some additional clarification for in terms of the draws. I'm sure that perhaps Heather or Jackie might have some clarification on this, but there is the interim rule does allow for net income calculation, but doesn't speak specifically to draws.
Yeah, Lindsay, I agree. I think those transactions that are really centered around the balance sheet might be difficult, and we hope to see some evolution there. Right now, the language in regards to the net income piece does reference for independent contractors or sole proprietors. What can be included is wage, commissions, income, or net earnings from self-employment or similar compensation. So we may see some evolution there in that language as to what can be included. But at this point, I think we'd be limited to something like a net earnings.
This is Kieran. I would just add from an accounting perspective, because we've got similar questions and we don't have much more guidance than what you ladies had just said. And so we were telling people first, you need to look more at self-employed earnings as opposed to draws. Draws are just a mechanism to take cash out of the company that isn't really the earnings. So that seems more consistent with what you're saying. And then if you're taking some salary and you have some self-employment earnings, you still have to cap the total of those two at $100,000. There hasn't been a lot of guidance on whether that was the correct approach, but that was collectively where we felt the best application was. Include your wages to the extent that they're not over $100,000. You can include some self-employment earnings, but the total of those together shouldn't be over $100,000, and use earnings, not draws. So whether that's guaranteed payments and SE earnings, but not draws. There was also a lot of confusion as to whether this applied to partnerships who have a similar earning structure. None of the regulations really addressed that partnership entities whatsoever. So there is still a lot of uncertainty on this, and our guidance was put it on the form. It seems like it should be included, and unfortunately, it's going to have to be figured out a little bit more on the back end unless the bank comes back to you during underwriting with more questions or other things.
Okay. That's great guidance.
And Jackie, and Lindsay references, but what if a sole proprietor has already applied? What happens?
Well, right now we haven't really seen any sole proprietors applying. What happens at my bank is that we're just going to hold on to their application until the 10th and process it on the 10th. So we haven't been putting any sole proprietors through, or at least I haven't. I know that there's some in the queue. So if you applied at your respective institution, I would just keep, in contact with them, making sure that they are processing your application. I mean, tomorrow's the 10th, Saturday. I assume every bank's going to be working all weekend long, all night long. I would just keep in contact with whoever your contact is, and just make sure they're putting it through in a timely manner. It's only one day away.
Okay. And Jackie, I'm going to keep with you. Can they push out the disbursement out to a later date since their offices may be closed 6 to 8 weeks?
Actually, no. That's one of the guidance that just came through. It's kind of where the date you get that money in your account, the 8 week starts. You can't push it out. The only thing you can do is just apply at a later date. And then at that time, then who knows, where the money is going to be at. But some of the people that I've talked to, and this is comes to be one of those questions that I get often along with the sole proprietor questions. What if do I just pay my people? What if they're on unemployment? So, our guidance from the SBA is the day you get the money is the day the 8 weeks start. So you have to hire your people back or just start paying them, because the intent is to get money out in the communities so people can continue their lives. And once we get over this crisis, then the financial debt and burden will be minimized through this program.
Okay.
Jackie, that's great guidance there. And Lindsay made a good point earlier too, that remember folks, at the end of the day, if you get past that initial period of forgiveness and you end up with a loan structure in place, you're at a 1% rate with no prepayment penalty. So not too bad of a place to be sitting in. I remember too, when they spoke to the forgiveness, 75% needs to be for the payroll costs, but there's another 25% that can be toward items like mortgage interest payments, rent payments, utility payments, and interest payments on some other debt obligations too. So take advantage of that as well.
Maybe just a couple more questions. Right, we're getting close. Well, we're at 4 o'clock past it. So, but I do want to get this one more question in. Heather, with you referenced the other loans, is there delays with the traditional SBA lending due to the PPP and the EIDL loans being focused on?
I would say check with your lender that you would be using. We are really trying to keep our service level agreements as strong as possible. I'm not going to say we don't expect them to waver a bit. I don't think we're going to be necessarily seeing 10-day approvals and 30-day closings on real estate for a little while, at least moving forward. I can tell you here at our institution, we've been proud to more than double our SBA team over the past 3 weeks. And like all of us here on the phone, we've all referenced our folks are working Saturdays, Sundays, putting applications on through the middle of the night. So we are all endeavoring to have this benefit you as much as possible and impact you as little as possible. We're trying to keep our timelines as tight as possible. But I'm sure we're all going to see a little bit of evolution in the timelines here. But check with your lender to see what type of feedback they can give you.
So I said two from this point because I have a follow-up question on the 6 to 8 week period. Jackie, do they have to hire them back on day one, or do they have a couple days to bring them back on the payroll?
No, they don't have to hire them back on day one, and it doesn't even need to be the same employees. If you have some people that want to just stay unemployed, that's fine, but then you have to hire somebody else to take their place in order to get the full forgiveness during the 8 week period. So just remember, 75% has to be spent on payroll, and the other 25 can be on the items that I mentioned, and I think it was Lindsay mentioned as well.
And Lindsay, I think we kind of somewhat touched upon it, but to be a little more clear, does the self-employed individual's own compensation count, or does the eligible payroll have to be for another employee employed by the self-employed individual?
No, the self-employed individual can count their own payroll into the payroll calculations. I mean, they would be subject to the 100,000 cap, but if we're talking about compensation and payroll, then that is an eligible use of the program fund.
Thank you. At this point, I'll turn over to Kieran to wrap up the session.
Thanks, Joe. I'd like to first thank all our presenters today, Lindsay and Heather from Huntington and Jackie from Citizens. We really appreciate you guys taking the time. I know your banks are under a lot of stress with their current customers to answer questions and get information processed and out. So we do appreciate your time jumping on the call today, helping us try to get our clients a better understanding of what's going on. I think the tone of today's call was everybody is trying to do the right thing, follow the spirit of the law. The bill was intended to get people to work and not on unemployment. So to the extent those funds are available, that's what they're to be used for. You can bring back other people, but it's to keep people working. And you can apply for it, take the loan. You don't use the money to pay those things, that's fine. You just have to realize it's not going to be forgiven, and it's going to turn into a loan, as we've talked about multiple times, at a decent interest rate and some favorable terms. So there are certain circumstances where clients are going to have to look and determine at what point do I need to bring my workforce back? When does it make the most sense? Do I have work for them to do? Do I want to pay people to clean and sanitize the plant? Are we even allowed to be open? So I think a lot of that is going to change over the next couple of weeks. Hopefully the guidance, the SBA has realized that amount of information out there and the amount of questions that people have on the forgiveness is going to be as much, if not more, than on the application process. So be prepared, be detailed, keep your information, check with your advisors. You know, sharing information is the best that we can do right now. And as we all are remote, things like this webinar I thought were great. It was nice and quick to pull this together to get information out. So we'll look to do more of this for our clients and friends as more information becomes available. In the meantime, I appreciate everybody's time today. It's just a different world that we're living in now than we were a few weeks ago, and we'll have to continue to evolve and grow. So if you have questions or concerns, please reach out to your advisors at H2R. We're here to help. And thank you, everybody, for your time today. Be safe, be healthy, spend time with your families, and let's hope business gets back to normal pretty soon. Thanks, everyone.